complete any stoping. They moved out due to low gold prices in the mid-1990s. Here now we have the ability, we've expanded the resource all the way out to around sort of 500 metres below surface. Our exploration target sits a bit over 600 metres below surface, and the deepest drilling, as I said previously, on the main lode sits 900 metres below surface. We know when we have the structure, we know when we have the correct geology, that we get high grade mineralisation here. So I've got no doubt as we continue to expand and we enter into operations that this mine won't have a 7 to 8 year mine life. This will be going for 10 years plus. We have a number of near mine discoveries at Midway and Paddy's. Now, again, understanding that some of these mineralisation was previously offset to the south, there wasn't a lot of drilling. There was drilling along strike from the known gold resource, but there wasn't a lot of drilling further out to the east. Now, these fault offsets have shifted the mineralisation up to 100, maybe even 200 metres further to the east. That's where we hit Paddy's lode initially. We've expanded that out so far. We've got it defined over about a 200 metre strike. Mineralisation probably starts about 150 metres below surface. So this will be a fantastic opportunity for a future underground drive as well. It is close to existing development. With our pre-feasibility study we're working on now, it probably sits about 100 metres from a proposed decline that we're putting in. Midway sits out in a hanging wall, looks to be a linking structure between two shear zones that run between Bunker and UME. A lot isn't understood about these linking structures, and as we've continued to build out in around Midway, it is turning into quite a defined high-grade zone that's probably running similar again. We've defined it over about 150, 200 metre strike over mineralisation probably starting at 150 metres below surface. So what we are finding here at UME is once we've moved off the granite contact on the main UME shear zone, the high-grade mineralisation tends to start a lot deeper. And as we continue to drill and understand this ore body, we'll continue to make more discoveries. Cones, we had some good drilling here last year. We found, this is just north of Ramelius Penny West operation. There's a number of east-west style trending mineralised features. The interesting thing to us is we want to have a look at potentially finding the source material on the north-south structures running in between here. There's a lot of work happening to try to understand this system, and we'll continue to look to drill and follow this up because some of those grades are just immaculate, running 3 metre widths at sort of 30 grams a tonne. Something that sort of come across our desk late last year, we had a joint venture partner, Venus Metals. They defined a really high-grade lithium anomaly and took a whole heap of rock chips and got about 4.5% lithium. We've got the gold rights for the underlying tenure. They have the sort of lithium and other mineral rights. We've got a tenement to the south where we have 100% ownership of all rights. We then thought, well, we're not drilling. Geo's got a bit of time on their hands. We've gone into the field, completed a whole heap of mapping and soil sampling just before Christmas. And that's turned up quite a significant lithium anomaly. What we have there at the moment is about 12 to 13 Ks of tenure that displays quite high-grade lithium anomalism in soils. Whilst we're not drilling at present, we are going out there on the field and we've just got the boots on the ground, doing more mapping, more soil sampling, infill rock chip assays, and really trying to define what the potential of that lithium anomaly is. That has the potential, as I said before, of allowing us to help fund this project and continue to move it forward. Similarly at Mount Fisher and Mount Eureka, as I said, we released the geophysics here yesterday, highlighting that along strike from what are known gold resources and pretty high grade gold resources, that there is a significant potential to expand those and to effectively have greenfields targets. This is an exceptional exploration opportunity. When you've got 2.3 million ounces of gold at 4.4 grams a tonne at UME though, it makes it hard to justify significant exploration spend to advance this. We are actively seeking potential to offload the asset and be able to use that to fund efforts here at UME. So why invest in rocks? And I guess like most other gold developers here at the conference, everyone has had quite a tough time in the market over the last 3-6 months. Gold price is at record highs. We are seeing a number of mid-tier miners churning out millions and millions and millions of dollars of cash every month. We are seeing M&A activity starting to hot up in the sector as well. The junior gold sector is probably the most undervalued it's been in the last 10 years. There is the potential for investors to make a lot of money following good projects, and when you have 2.3 million ounces at 4.5 grams, it is one of the highest grade projects available at this end of the market. We've got a number of near mine discoveries that we'll need to look to continue to advance the project. We'll push this towards pre-feasibility study and we'll show the true value that this project will have at these record gold prices. Thank you for your time, and hopefully I've just beaten the clock.
Well done. I'm not allowed to give anyone chocolate today. I think that's wrong, but I'll keep it myself and eat it. Maybe that's right for me. All right, but I trained you really well yesterday, so I'm very impressed. Gareth Solly, hello, MD extraordinaire. You've got 3 big areas that you're focused on, one of them in particular. So if you know where, is it Paraburdoo? Mm-hmm. So about 180 kilometres west of Paraburdoo, this young fella here is... boots on the, well, you are younger than me, your boots are on the ground, things are going a bit crazy out there. They've got mining contractors, equipment, things are ramping up as you put things back into play for that big facility out there to do some crushing. Is that right, of your own?
We're going to get it, absolutely, Chris.
Tell us more, what's happening with the Black Cat Syndicate? Please make Gareth very welcome, everyone.
Thanks for that intro, Chrissy, and good morning, ladies and gentlemen. Pleasure to be back here and presenting at another RIU Explorers Conference. I think it will be a good year for gold, and thanks to Rob for all his talk. He did a good job. And it's going to be a great year for Black Cat. And as Chrissy said, and as the title of this slide is, we are currently refurbishing Paulsens, which does mean that we'll be back in production and producing gold later this year. I'm assuming everyone knows about Black Cat, but maybe there's people that haven't been to Explorers before. We have been around 6 years. We've been here most of those years as well. We've got 2.5 million ounces of high-grade gold resources spread across our 3 projects. And they're very high-grade, just like Rob before us. In fact, we've got 2 of the highest-grade underground resources in Australia, being Paulsens and Coyote. So for us, we've got installed infrastructure at both those sites. We've got permitted sites to build mills at Kalgoorlie as well. So we've got 3 projects, all very near production, and we're looking forward to getting them going. We've got funding coming in, and I'll talk to that in this pack as well. And that allows us to get Paulsens up and running and producing gold this year. And we'll use that internal cash flow to sequentially develop the other 2 projects and eventually be producing at around 150,000 ounces per annum. So all our projects are regionally very strategic. They're the only processing facilities for gold in those areas, and we'll leverage off that into the future. So here's the 3 pillars of the company. Paulsens, Coyote, Cal East, all have good endowments of gold, large tenement holdings, great discovery potential. We've released studies on all of these. We've got initial production targets set for each one. And they're all producing sort of 200,000 to 300,000 ounces of gold over a 4 to 5 year mine life. Obviously, these mines have operated for typically longer than they've got current mine life, and that's the nature of these high-grade gold mines in Western Australia. Right now, we're refurbishing Paulsens. We intend to upgrade and refurbish Coyote, and we intend to build Cal East from the ground up. And therefore, we need less capital for Paulsons and more capital for Cal East, and that's why these are sequenced 1, 2, 3 from lowest capital to highest for us. All produce good cash flow and all have good all-in sustaining costs. From a corporate point of view, 306 million shares on market, some options, some performance rights there for employees, predominantly about 60 to 70 million market cap at this point. 8 million in the bank at the end of December, some more came in January. Northern Star still owed 10 million, but over the next couple of years, so nothing urgent there. Top 20 holders have about 41% of the stock, and directors hold about 10%. Those directors are Paul Chapman, Les Davis, founding directors of Silver Lake Resources, with Tony Polglaze from Avanco fame, myself, so there's 3 guys with lots of experience in grey hair, and myself on the board. But all of us have experience starting gold mines, as does the rest of the management team. In terms of funding, we've got $60 million coming into us this year. 9 million of that is already in the bank account, and we're using that right now, ordering long lead items and doing early works in the mill. We've got equity placements of 36 million to 2 Chinese groups. They'll get 16% of the stock each. We're waiting for FIRB and Chinese regulatory approval for that, and we expect that to come in over the next few months. We also have 15 million in debt coming from one of those groups, with good payments, low interest, very friendly for us in terms of our startup. So what are we doing with that money? Well, we're restarting Paulsons. Paulsons is, of course, the operation that kick-started Northern Star, took them from an explorer to a producer, gave them lots of cash flow. For us, we think it'll do exactly the same thing. We've got a fantastic tenement package here, very much underexplored. We've got a well-maintained 450,000 tonne plant. It does need refurbishment, and we've got the capital coming for that. Dewatered, ventilated underground mine, it is important. We have been underground drilling less than a year, but we've grown the resource from about 80,000 ounces when we took ownership to over 400,000 ounces at the last published resource. It is the only plant within 400 kilometres, gold processing plant. There are other interesting gold deposits in the area, and we'll leverage off that in the future. Paulsons has produced 1 million ounces in the top 1,000 metres from surface. We've got another 400,000 ounces up and around that top area, as well as the start of the extension of Paulsons. On top of that, we've got Footwall Gabbro Zone, which is loaded with gold. We've got that part of that in our mine plan now, and there's going to be a lot more mining in that area. The Eastern Zone, very much under-drilled, and the Paulsons repeat is an untested target. The geophysical target defined after the mine closed, when Northern Star spent $2 million on that. There's a lot of scope for additional ounces to come out of this. We've got a 4-year plan here already, and this mine will continue to grow into the future. Here's the metrics of the study. I won't go through it all in detail, but I will point out that we did publish a study in July. Then we did a few more months drilling, and we published another study in November. And we added an extra year and basically improved every metric by sort of 30 to 40% with only a few months drilling. And that's the nature of these ore bodies, and this particular ore body, especially if you drill it, you'll keep growing the mine life. And that's what you saw in the history of this operation. It only ever had a very short mine life that operated for 13 years. We'll keep doing this. And there's gold everywhere here. So we've got plenty of gold in our current mine plan, which is based on our current resource. And then there's a whole heap of gold that's not included in a resource. We haven't been able to drill it, but it's hanging out of the walls. So our intention is to go and mine a few of these areas as we start up. They'll produce high-grade additional feed tonnes, which are outside of our mine plan. Of course, that will increase the cash flow, reduce all-in sustaining costs. The mill is not full, so we're only operating the mill at about 80% at this point, based on our current mine plan. So this is upside. So where are we at right now? Well, we have started our refurbishment, and as Chrissy said earlier, we've run up the crusher. The guys are probably running buckets full of dirt through the crusher at this point. But certainly we've got the key people in place. We've got management, we've got the maintenance people. We're doing the early works right now. We're ordering long lead items. And that's going to debottleneck the rest of the refurbishment once we get going. That will happen once we get the funding in. So over the next few months, we get the funding in, then we'll commit to the full refurb, the mining contracts, etc. And we do expect that it's a 6-month process from full funding to getting first gold. So that's why we'll be expecting first gold in the second half of this year. A few happy snaps from around site. As I said, the guys have run up the crusher, ordered the steel for the tanks, tested all the motors and agitators. There's not many that are broken, and we've got stock in the store to replace. Got motors, ordered the long leads for the mill, ripped the Nelsons out already. They'll be stripped and we'll use spares. Belvedere is in their mine plan. It's about 20,000 ounces to our mine plan, so it's not huge at the moment, but it's only a 30,000 ounce resource anyway. It's 5 kilometres from the mine, and it's got a huge potential. We've been doing some exploration drilling further along strike, very greenfield sort of work, but there's a 2.5 kilometre strike with historic workings along this fault zone. We think there could be repeats of high-grade shoots that could be added to the mine plan in the future, because Belvedere clearly will work. And there's lots more potential here. So Paulsens and Belvedere are up the top of this image, but we've got a large land holding. We've got other targets that maybe look like Paulsens did prior to drilling ever happening that haven't been drilled. There's good potential for other base metals and other commodities on this lease package. And we've got a 2.5 million ounce exploration target, because clearly this is not going to be the only million ounce gold deposit down here. One of the interesting areas for the geos, a bit different from just straight gold, but there's certainly precious metals down here as well as critical minerals, is Mount Clement. And we've just added some extra tenure to the south of Mount Clement in the Bullaloo acquisition. So this is a copper gold sort of area, and obviously there's the antimony kicking around as well. I'll quickly nip up to Coyote while I've got time. Again, this is a brilliant high-grade deposit. It's up in the Tanami. It's along strike of the 20 million ounce Cali deposit. Here we've got the only processing plant within a 200 kilometre radius, and this is a good bit of kit, good bit of infrastructure that would be hard to build again in the future. We'll just have to upgrade this and refurbish it and get it going. So this makes for an easy second project for us as a company after we've got cash flow coming out of Paulsens. So we've published a scoping level study here. We'll have to upgrade that again going forward. But that does show that there's good cash flow, low all-in sustaining cost, and certainly lots and lots of upside. It's a very high-grade resource. There's a lot that is not included in the resource here at Coyote. But the 15 gram underground is the jewel here, and that will be the focus, and that will continue to grow. We've excluded a fair bit of the underground from the study so far, so there's a lot of upside to come. Cal East is where we floated 6 years ago with about an 80 square kilometre tenement package and no resource. We spent our first 4 years looking at this project, growing it, and we've got 1.3 million ounces sitting within 50 kilometres of Kalgoorlie. We took this to the point of getting the approved mill site for an 800,000 tonne per annum processing facility. So that's out the road at Majestic between Mount Munga and Beerlong. So that's all ready to go. Obviously, it hasn't been a great time to be doing a new construction around Kalgoorlie, and we've got lower capital startups at Paulsens and Coyote. But this is a great project. It's de-risked. It's got a PFS. It's got good cash flow. There's 700,000 ounces in our portfolio at the moment that has not been included in the current study, and there's a huge amount of discovery success to be had out of this large tenement holding. So this is a great third project for us. Obviously, there's a few changes around Kalgoorlie at the moment. This may come forward in the project pipeline, but at the moment, Paulsens is our number one. Once we're operating, obviously, we can be re-rated as a junior miner. You can compare all the junior miners and compare their enterprise value per production ounce, take an average. We'll get a re-rate. We should get a lift once we're in production. And our first project will be producing somewhere around 50,000 ounces. Second, maybe have 100,000 ounces production, and the third at 150. We should easily increase shareholder value through this method. So I'm ahead of time, Chrissy, but I got you first. So clearly, you know, we've got 2.5 million ounces of very high-grade resource, 3 projects which will all be in production at some point in the future. As a junior, you know, we've got 3 projects which will all be company makers. We've got all of them in our portfolio. So we'll start the first one. We don't have to go and acquire the second one. We've got that already there. But they're high grade. We've got the funding in place to start, and we'll be pouring gold later this year. If you'd like more information, got a couple of GOs out in the booth. Please come and see us and discuss. Thanks.
Gareth, I reckon that's the first time you've done that in 3 years. I'm very impressed. And again, if I had chocolate, I'd give them to you, lad. All right, come up here, sir. So we're waiting at the moment, aren't we? We're waiting for government to meet out their policies, to meet up with what our outlook is for uranium at the moment, I suppose, to uranium markets to align. So our next company up on stage is certainly working hard in the background to make sure they are maximising the potential of all their projects for when that moment in time eventuates. So would you please welcome up to the stage today, we've got from Toro Energy, Richard Pomsany. Richard, welcome.
Thank you, Chrissy, and thanks to Vertical Events for inviting Toro Energy to present at this year's conference. And good morning all. So for those of you who don't know much about the Toro story, we are an advanced uranium company. Our flagship project is the Wiluna Uranium Project in Western Australia that has 62.7 million pounds of U3O8 and 68 million pounds of vanadium pentoxide. On our uranium tenure, in the bare years for uranium, we made some substantial nickel discoveries, and we made some encouraging gold discoveries. So all of this ground was within the Toro portfolio, and we made those discoveries. So there's a great business case to demerge those other metals from the uranium and vanadium business. We also have a joint venture interest in Namibia with JOGMEC and Deep Yellow, and we also have 28 million pounds outside Wiluna in exploration projects within Western Australia. Our board is comprised of very experienced uranium people. I've had over 2 decades experience in uranium, either executive or non-executive experience. Richard Patricio is the director of NextGen and chairman of IGO Energy in Canada, which contains substantial uranium projects. The best undeveloped uranium project in the world, or yet to go into production uranium asset, is in NextGen. And Greg Shirtliff is an ex-Cameco employee with over 2 decades experience, and Michelle has been involved with Toro and uranium investments for over 10 years. The important point to note here is that our market capitalisation is just over 50 million, and we have 15 million in the bank, so our enterprise value is quite low. And there is a compelling opportunity to jump on board Toro as an investment and reap some short-term returns with what we've got in store. So overall, we have 91 million pounds of uranium. We do have an environmentally approved project with one condition that needs amendment retrospectively, a substantial commencement condition. 1 of 4 projects met that substantial commencement condition in Western Australia once the government changed back in 2017, the state government. We were unable to dig a hole because our uranium mineralisation starts from surface. So that option of substantial commencement was highly constrained for us because we couldn't do any earthworks as such without actually starting to mine uranium. So we were in a bit of a bind. But the point is that, for those who are AFL inclined, this project was permitted in 2016 by the feds and 17 by the state when Adam Simpson was the coach of the Eagles. And Adam Simpson is still the coach of the Eagles this year. For how long remains to be seen, but he is. So this wasn't a project permitted decades ago when Gough Whitlam or Malcolm Fraser were the Prime Minister. This is something that was permitted literally only yesterday. So we are an advanced asset that has gone through rigorous assessment by government. We're not an exploration asset. We are heading towards production. We will work adjacent to current government policy, but we're not going to let current government policy dictate the development of this asset. We are committed to getting it production ready. So from an investment perspective, we seem to be heavily penalised for not having a favourable state government policy at hand. So what I would urge you as a potential investor or a current shareholder to look at is, when do you think any uranium project in the world or any uranium project in Australia could get up from here? If you take the view that it won't be till later this decade or even 2027 onwards, then you've got to ask yourself, do you think this current government policy will be in place in 2027, 2028, 2029? And with that in mind, ask yourself whether an enterprise value of 35 million is justified for Toro. We have 3 deposits within Wiluna: Lake Maitland, Centipede, Millipede. Lake Maitland has a uranium a joint venture partner with reputable Japanese partners, Japan Australia Uranium Development Company, which is a syndicate of nuclear power companies out of Japan, and Itochu. So Lake Maitland, which is about 80, 90 kilometres to the south of our other 2 deposits, Lakeway and Centipede and Millipede, because of the distance and because of the joint venture relationship, we did a scoping study for that project, and we calculated an NPV of 610 million, a low capex, rapid payback of 2.5 years, and outstandingly low costs, both C1 and all-in sustaining. Our all-in sustaining number of $28 US a pound of U3O8 is an excellent number. So we are moving towards production. This isn't an exploration company. It has an exploration arm, but our core business is to move Wiluna into production. We will develop a timeline for the development of Lake Maitland. We have work streams underway in preparation to launch a DFS in about a year's time. One of those work streams is to commence a pilot program at a rigorous level, something that will stack up at feasibility study level. We hope we can get a small increase in the resource. We hope we can get a small increase in the recovery. Either way, signs are looking good that this project will make a lot more than the 610 million NPV at Lake Maitland. At Lake Maitland, we will produce 23 million pounds. Look, I'm not going to go into the uranium sector. We all know that the spot price is hovering around $100, and it looks like we've got higher prices for longer. At Wiluna, as I said, it's Lakeway, Centipede, Millipede, and Lake Maitland. We did a Lake Maitland pit optimisation based on a revised flow sheet. We spent the last 7 years developing a revised flow sheet, and we've generated what we think is an extra $620 million US in gross product value. We've got a substantial uplift in our uranium production out of Lake Maitland. Before, we were only going to mine the red part of that map. We are now we will stack up at DFS, hopefully. We will mine the red and the green part of that map. So Lake Maitland, one of 3 deposits that generates that large NPV, we are doing a refresh of that scoping study, which is now about 15 months old, 16 months old. And that number, based on current pricing and exchange rates, will go up substantially. We hope to be in a position to release that soon. So that's the first bit of news, along with some news about the pilot program that'll come out in the short term. So we're looking at a 17.5-year mine life, producing 1.3 million pounds of U3O8 and 0.7 million pounds of vanadium annually. As I said, we spent the last 7 years working out an improved processing flow sheet, and there are many benefits from that flow sheet, but the biggest thing is we've reduced a couple of capital intensive items. We've reduced the CapEx, we've reduced the OpEx, we've reduced the size of the project. The leach tanks are now smaller. Because we're able to beneficiate the ore and upgrade the product, get rid of the waste, that material now, and get rid of the clay, that material becomes porous, which means we can wash it and remove the salts, which means we use much less reagents in our chemical processing circuit. We then can move to ion exchange as a result and liberate the vanadium. The vanadium doesn't make the difference in whether this project is economic or not, but it's like cream on the cake and makes a significant contribution to CapEx over the life of the project. We made some nickel discoveries on our uranium tenure. Our best nickel discovery is actually on Lake Maitland at Dimmer. We're in Yandal country, so that means we're in gold country, a prolific gold mining district. We've got some encouraging gold results. We haven't drilled below basement yet into the fresh. So as I said, there's a compelling case that as a shareholder of Toro, you will receive an in-specie distribution of a share in a new company based on the gold, nickel, and other mineral assets of Toro in the near future. What's going to propel us going forward? Because of the work we've done at Lake Maitland, one of 3 uranium deposits, we haven't financially or technically evaluated the other 2 deposits, Lakeway, Centipede, Millipede. We are doing that now, and we'll continue to do that this year with the healthy cash balance that we have. So we're looking to maximise the financial and technical feasibility of Wiluna as a whole. It might be that Lake Maitland is a standalone mine, and Centipede, Lakeway, and Centipede, Millipede, and Lakeway are a mine of their own. The permit that 4 companies went out and rushed to get a permit for before the government changed, for us, the project that was permitted at that time is not our optimal project. In the 6-7 years that we've spent doing research and development since the project was permitted, because of the change in the processing flow sheet, we need to amend our permit anyway. So we've got a project that'll make a lot more money, and we will go to the government at the appropriate time and seek the amendments to approvals that we need. As I said, the refresh of Lake Maitland and the pilot plant work, we've got 28 million pounds of U3O8 in exploration assets. We could reinvigorate our exploration ambitions. And the thing to note is the uranium market is strong and will continue to remain strong. There's nothing foreseeable from either a supply or demand side that will see the structural deficit that has emerged abate. So uranium prices are here for longer. As the uranium is only 2 or 3% of the cost of producing nuclear fuel, it's also demand inelastic. Like whatever the cost of uranium is, no one's not going to buy uranium because it's too expensive. And the reality is the increase in the uranium price that we're seeing isn't even really demand-led, right? The true demand is yet to come. So the best is yet to come. And even for Toro, our best version of Wiluna is yet to come. Yet we only have an enterprise value of 35 million because we've got a current government policy that is not in favour of uranium. Just quickly in conclusion, this is a statement by Roger Cook, which is basically confirmation to you that obviously he had an energy transmission summit and he's thinking about our energy needs here in WA, given Synergy makes a massive loss every year. But Toro's fortunes, any uranium explorer or miner's fortunes do not depend on Australia becoming a nuclear adopter. It's very important to note that the world wants uranium and the demand hasn't really even flooded in yet to really boost the price. So our friends in Japan on the 1st of February declared uranium to be a critical mineral because of energy security reasons, the Russia influence. So it makes a place like Australia a very attractive place and somewhere where you would pay a premium to secure supply. But it doesn't mean that Australia has to adopt nuclear energy as part of its mix for us to be successful. We have Japanese joint venture partners at Lake Maitland and other people that are really keen to get rights over our product. With the current situation with nickel and lithium and the short-term outlook in those minerals, with a government that, you know, has to really look at energy needs, the cost of energy in this country, there is an opportunity here for the uranium to be a topic, and uranium exploration to be a topic worthy of discussion in WA. When uranium was lower than $40 US a pound, it didn't really matter whether there was a supportive government or not. But given Lake Maitland and Wiluna will generate an NPV well in excess of $1 billion after tax, I'm pretty confident throughout the course of this year we will show you that. It's an important question the government has to address as to why uranium is best kept in the ground. You've seen that Roger Cook say he will support the decarbonisation efforts of other economies. Well, uranium is a key plank in that. With GOP, you saw over 20 countries over 4 continents committed to triple nuclear capacity by 2050. It shows that the future for uranium and Toro is strong. Thank you all for your attendance today. Thanks, Chrissy.
Always a little bit wary about approaching such a passionate man, and he's definitely passionate about that. Got some very, very valid points to make. All right, Legend Mining, come and join us on the stage. They've got a bit of spring in their step because they've had a nice little windfall from the tax man, which sounded fairly fabulous. They've also had some windfall, some little good bits of news as well with their loops. What do you call your loop flying?
Oh, the fixed loops.
Your fixed loops.
EM, I'll talk
I like
all
that.
to that.
That's an impressive bit of tech. Are you going to go into that during this discussion?
I absolutely am.
Excellent. Okay, well, would you please make welcome Oliver Kitty, who is the Managing Director for Legend Mining.
Thanks, Chrissy. Good morning, everybody. Thanks for coming along to listen to the Legend story. Thanks to Jackson and Stu for the opportunity to present the Legend story again this year. Always like to lead off with a bit of a gag slide, and it's a pretty easy one this year, given the negative nickel sentiment. You only have to open a newspaper to see that nickel is very much on a downward spiral at the moment, but I think that's probably a best example of an investor trying to weather the nickel market at the moment. My talk today is around Legend and how Legend is navigating this negative nickel sentiment. I will be making some forward-looking statements, so please take time to read the disclaimer. A quick overview of Legend from our corporate level. We've got a current market cap of just north of 49 mil at 1.7 cents. I think today we touched 2 cents, and we've seen some buying in Legend over the last 10 to 14 days, and I'll explain why. Nominally, it's too cheap. Our cash position as of the end of December was 11.6 million. You can add another 3 million to that, as Chrissy touched on. We've received our R&D rebate, so that puts us in a really, really strong cash position going forward to weather this downturn in the nickel market. Very importantly, no debt. Our shareholder structure, 63% of our sharehold, top 20 is owned by 63%. Our top 4 own 54%. Our major shareholders are Mark Creasy, also a joint venture partner, and IGO at 12.9%, also a joint venture partner. I talked to, being cheap. All those directors listed there on screen, starting with Hilary McDonald, then myself, and most recently in the last week and a half, Mark Wilson, our chair, and Tony Walsh, our co-sec, have all bought on market. So we're genuinely backing ourselves. The investment highlights for Legend, we are, and we don't shy away from, being a dedicated nickel, copper, cobalt explorer. We've got a dedicated team of science-driven explorers, and I'll talk to that science today during the presentation, with a track record of discovery. So Derek Waterfield, our EM, he's in the audience today and he's at the booth, so please come along and have a chat to Derek. The tenement location, we've assembled a great tenement location in the Fraser Range, north of Nova Bollinger. The only 2 players in the belt are IGO and Legend. The Mawson mineral resource, I'll spend a bit of time on that today. That's a really strategic resource and definitely a foundation to grow. We think it's far from finished there, and we've got some compelling evidence why. We've got a pipeline of targets in our ground in the Fraser Range. Octagonal, I will focus on today, which we think is a real sleeper. And well funded, like I touched on, north of 14 million. in cash. And as I always touch on, 90 cents in the dollar goes in the ground at Legend. So why the fall in nickel? I think if you would have missed this, the only way you've missed this if you've been sleeping under a rock. You open up a paper, like I said, and it's all about the negativity around nickel. So what is driving that negativity and the fall in the nickel price? Well, it's been an increase of supply of this class 2 nickel from Indonesia, coupled with this lowered uptake of EV demand. And that's resulted in that third bullet point there, which is this surplus for nickel being pushed out by another 2.5 years to 2028, when we're going to see it in deficit. And this deficit is where it becomes really important. This looming deficit from 2028, is it all going to be filled with class 2 nickel in a decarbonised future? And that's a big question. You can see there's a lot of talk around bifurcation, and will bifurcation happen? Unsure, but there's a big political push for this bifurcation to take place between carbon intensive derived nickel and sort of ethically green supplied nickel, which is the sulphide producers here in jurisdictions like Western Australia. This is a really, really good slide, and it talks to that deficit, that looming deficit in 2028. Where are these discoveries going to come from, these new nickel discoveries? The discoveries, as you can see there from that graph, they've effectively dropped off a cliff since 2010. And the next big nickel discoveries are going to occur in these underexplored terrains, like we are in the Fraser Range, these underexplored, undercover terrains where you've actually physically got to apply some genuine science and thinking, roll up your sleeves, have a bit of grit about you to explore for these style of deposits. But I think the third point on this slide is the most pertinent. Regardless of the nickel headwinds, a quality class 1 sulphide asset produces good money. A perfect example of that is Nova for IGO. In their December quarter, some 40% of their EBITDA for the company has come from Nova Bollinger in the quarter. So that just shows they're mining lower grade stopes at the moment, and obviously higher cost at north of $4 a pound production cost. They're still printing money out of that. So a good quality sulphide asset does print money. One of the things that I get, I've shown this graph to a few people and a fair few investors, and they're all very much like, they say to me, WTF, we're the fines. And that's pretty much where Legend comes into the equation. Like I said, we're in one of these underexplored terrains, being the Fraser Range, east of Kalgoorlie. The Fraser Zone sits 250 kilometres east of Kalgoorlie. We're primarily exploring for these nickel, copper, cobalt style deposits, which I touched on. And as always, I like to touch on the infrastructure here. You can see in the southern portion of our tenure, you've got the Trans-Australia Railroad linking up to Kalgoorlie down to Nickel West, the Kambalda concentrator, and down to the Esperance port. So the Mawson deposit is a mere 30 kilometres from that railroad. The Rockford project itself, like I said, we've got 2,500 square Ks in what we believe is one of the most underexplored nickel belts in the world. The Legend team has displayed the ability to find these mineralised intrusions and convert them to resource in the case of Mawson. We believe there's more to be found, and that's our job, and that's what we're doing with our systematic exploration. Completely science-driven. There's no outcrop in the Fraser Range. So you're compelled to roll your sleeves up, like I said, get into the geochemistry, use all the tools at your benefit, including seismic, which I'll talk to try to find these haystacks and then delineate the needles which we're looking for, which ultimately would be a next Nova Bollinger. The last point on that I will touch on is the rationalisation of ground holding. Anybody that's followed the Legend story over the journey for the last 7 years would know that we had over 3,000 square Ks now. We've started to shrink that, and that's been a deliberate act. As we've worked through this project, we've been able to upgrade some ground and downgrade others. So therefore, we're reducing our footprint and conserving capital. I'll touch on Octagonal firstly. This is our project that we spent most of our time on in 2023, namely targeting a an eye-shaped feature which sits on that red line on the screen there, which comes up the western side of the Fraser Zone. That structure links Nova, Silverknight and Octagonal. So Nova and Silverknight are the other two deposits in the belt. You can see there it's an eye-shaped feature for the geos in the room. That's a fold interference pattern. Octagonal, like I touched on at the top, we very much believe this is a discovery in the making, and we're seeing all the right ingredients over the last 12 months to confirm our belief. We drilled 4 holes last year into Octagonal. We confirmed that we're seeing the intrusion continue at depth as predicted by the 3D seismic. Importantly, we're seeing an increase in this higher MGO component and the nickel tenor, which I'll talk to in the next slide. Importantly, we're getting some really good reconciliation between our 3D seismic and the drilling, which gives us confidence to plant these holes in the right spot. You can see all those conductors there in the yellow. They're actually all related to mineralisation or proximal to mineralisation in drilling. These were delineated with a high power fixed loop survey that we completed there in those white squares, white rectangles. We got some really encouraging results, and obviously some conductors on that need to be followed up. But what we did take away was that this survey needed to be extended. It's telling us outside of this, further to the east, through that magenta zone, that this trend continues. So we'll be out there next month, back end of next month, continuing this fixed loop survey with the aim of honing in on targets for the next round of drilling. Like I touched on, this petrology we received literally 2 weeks ago. This confirms what we'd seen in hand sample, that we're dealing with what we call money rocks. So these higher MGO rocks, in this case a lersolite. And you can just see there, you don't need to be a geo to understand percentages. You can see the amount of nickel in the sulfide in these rocks. Our job now is to find more of these rocks and where they focus the mineralisation. But we genuinely think it's a sleeper, and we're seeing all the right ingredients for the next discovery. On to Mawson. Mawson is our deposit that we put a resource around in February last year. It was our maiden resource. In terms of endowment, it's just over 28,000 tonne of contained metal. The resource is very shallow. It's between 65 metres and 300 metres and remains open at depth. Metallurgy has been completed, excellent metallurgy. So this is high Fe MGO ratio. This material runs straight through the Nova Bollinger plant. It's the ideal feed blending agent for the BHPs of the world. We've completed seismic reprocessing. That's led into targeting, which I'll talk to in the next slide. And we believe that this resource is definitely a foundation on which to grow. We're far from finished with exploration there, from, as you'll see in the next slide. But the last point is really important. It's a strategic mineral resource. Nova's running out of ore 150 k's down the road. They've got less than 3 years to go, and this is compatible ore for that plant. So more to be found at Mawson, and this may seem like we're not doing a lot, but we've been reprocessing the seismic. We've been looking for where does this intrusion come from that's carrying all the mineralisation. The reprocessing of the 3D seismic has identified this compelling target zone, which marries with the structural analysis that we've completed. So we've come up with the same zone. Independent of that, we've pushed out this data to Sensor, and they've completed some machine learning, some artificial intelligence on the data, and completely non-confirmation bias independent of the data that we've generated in-house from a structural and a seismic perspective. They've identified the exact same zone. So that makes a very compelling zone for us to test. This zone sits here, you can see it on screen. The chronolith, we believe, comes through this break in the Mawson Fault, and there seems to be a zone of what is interpreted to be intrusion up against this big D9 conductor. Anybody that's been following Legend would understand that we've got massive stratigraphic conductors at Mawson. They can literally hide anything. We drilled 31 metres of massive sulfide grading 2.6% nickel, 1.5% copper. Couldn't see it in downhole EM. That's how thick these graphite conductors are. So you could literally hide anything in there. Just finish up on regional. Like I said at the top, we've got 2,500 square k's, but we're rationalising that ground. We're continuing to build up the pipeline of targets. Some targets fall away, others come up to be the next octagonals, and hopefully then go on to a mineral resource, i.e. Mawson, and the ultimate aim, delineating the next Nova Bollinger. The exploration schedule, quickly in my last 2 minutes. We've got a bit on. We're kicking off with the fixed loop surveying at Octagonal next month and drilling off the back of that. We've got drilling planning for Mawson, and regionally we're continuing with our EM surveying. So like I said at the top, you saw a bit of buying in Legend over the last 10 days to 14 days. And basically that's because it's just too cheap. If you look at the look-through value of Legend at sort of 1.2 at the bottom, we've got an in-ground resource worth multiples of our current market cap, and we've got 14 million in cash. So I'm not surprised to see the buying. I'm happy to dip into my own pocket and do some, as was Mark Wilson, as was Tony Walsh, as was Hilary McDonald. So we're backing ourselves, chasing these nickel deposits. We've got a dedicated team, as I talked to. The mineral resource at Mawson definitely has upside to grow. It's a strategic resource, and the final point there, we're funded to execute. So very much watch this space. Thank you, Chrissy.
Thank you. Thanks, Oliver. Appreciate that very much. All right, Lithium Universe Chairman Iggy Tan was quoted recently as saying the current short-term dip in lithium prices is an advantageous window that presents tangible opportunities for Lithium Universe. So this gentleman here, Executive Director Gunnar Abel, has been chosen to come to us explorers and explore those opportunities for us and their plans for the development of a lithium refinery over in Quebec. Would you please make him very welcome, everyone?
After a 10-year hiatus, a new lithium company emerges from the galaxy. Introducing Lithium Universe Ltd, committed to building a lithium future. Our universe is chaired by the original lithium trailblazer, Iggy Tan. Iggy ran Greenbushes Lithium in 1995 and was the first to commission a lithium carbonate plant in Australia. He was also the first mining executive with an eye on the lithium-ion battery future, some 25 years ago. Iggy and his team built the Mount Cattlin spodumene mine, rated at 137,000 tonnes per annum, and they also built the Jiangsu lithium carbonate plant, rated at 17,000 tonnes per annum. When Iggy first joined Galaxy, their market cap was less than $10 million, before ultimately rising to in excess of $2.5 billion at merger with Orocobre. Galaxy was also the first large-scale integrated mine-to-refinery project of its kind. That's Mount Cattlin, million-tonne per annum hard rock spodumene mining operation, utilising 4-stage crushing into dense media separation to produce circa 137,000 tonnes per annum. Then on to Jiangsu, which when it was built, was the largest of its kind in the world. Jiangsu was a Western-style continuous processing plant, which to this day remains the gold standard in quality control within China. Whilst these projects now reside with Allkem and Tianqi, it's important to note that when Iggy designed, built and operated these projects, the lithium prices were but a fraction of what they are today. This is a testament to his vision, foresight and ability to deliver on time and on budget in very difficult markets. Joining Iggy on the board is Greenbushes veteran, Mr. Pat Skellen. Pat ran Greenbushes for over 25 years, has significant spodumene concentrating expertise and oversaw expansion of Greenbushes from 200,000 tonnes per annum to in excess of 1.4 million tonnes per annum. So why are we in Canada? Well, Australia produced in excess of 2.3 million tonnes of spodumene in 2022 and is a pillar in the China lithium battery value chain. Now, the fertile ground of Canada, it's considered to be potentially as fertile as that in Australia, but we're yet to see any real production emanate from that region. However, with an influx of mostly Australian-based junior exploration expertise now forging a path across this new lithium frontier, we're expecting this to change. And as Mr. Lithium Joe Lowry says, Canada wants to be the Australia to North America. A few of our philosophies. We're not here to explore just for exploration's sake, but rather we're here to build a lithium project in Canada as quickly as we can. Introducing our Polar Exploration project. This project is located along the Trans-Tyger Highway in James Bay, Quebec. It boasts a generous footprint of circa 240 square kilometres and was staked when the lithium prices were at their previous lows. Also, it's nestled between what was then two relatively unknown junior exploration companies. So our Apollo project is less than 30 kilometres from Patriot Battery Metals Corvette and also less than 30 kilometres from Winston Resources Adina. As you'd all appreciate, it's been a hotbed of activity in that region over the past 12 to 18 months. Phenomenal drill results by both Patriot and Winston have been backed up with mineral resource estimates that are world-class. Patriot declared a mineral resource of 109 million tonnes at circa 1.4% lithium, and Winston declaring a mineral resource of 59 million tonnes at 1.1% lithium. Both have reported high-grade, thick mineralisation close to surface. We've completed our first stage of exploration in partnership with Laurentia Exploration out of Canada. We completed the high-resolution airborne mag survey and a really extensive soil sampling campaign to determine our priority drill targets for this calendar year. Now, we're all probably, unfortunately, old enough to remember the NBA Dream Team. The NBA superstars which took the Olympics by storm and put the NBA on the map on a global stage. The likes of Jordan, Pippen, John Stockton, to name a few. Well, never to be outdone, and some 30 years later, Iggy has decided to put together his own dream team. Joining Iggy and Pat Scallon on the board is world-renowned downstream lithium technology expert, Dr. Jin-Wan Liu. We've got Terry Stark, the former GM of Galaxy. We've got John Loxton. He was there and building Jiangsu with Iggy. Roger Pova, he used to run Mount Cattlin, and our newest appointee, John Zablowski, was the CFO for Galaxy. So in a very short period of time, Iggy was able to put together the team that designed these projects, funded these projects, and ultimately operated these projects. Now, what does a typical project timeline look like? Well, from first maiden through scoping, PFS, DFS, and funding, looking at upwards of 8 to 10 years. Compare this to what Iggy and his team were able to achieve at Mount Cattlin, from maiden to first product in just under 3 years. He did this by skipping scoping and PFS stages, whilst running a number of other processes in parallel, whilst leveraging an incredible team culture. Looking at what's happening down the road at the Kwinana hydroxide plant, they completed construction in 2021, within 5 years, however experienced significant capital cost blowouts in excess of $350 million. And their latest reporting would indicate that they're still only operating at 8 to 10% of design. If we turn the page to Canada, the story stays the same. Canada Lithium completed their DFS in 2011, and despite spending $250 million, could only produce circa 110,000 tonnes before filing for Chapter 11 in 2015. Nemaska Lithium, they completed their DFS in 2018, and after spending over $400 million, failed to reach startup in 2019. Compare this to Iggy and his dream team's track record at Jiangsu, from breaking ground to first product in just over 2 years. An exceptionally reasonable capital cost of only $120 million, whilst being able to deliver the highest quality lithium carbonate into market. So why have some of these previously mentioned projects not gone to plan? Well, there was a lack of operating maintenance direction at design, a lack of overall plant operation understanding, limited management oversight at design, and limited commissioning experience. And this is one of the main reasons why Iggy has put together a dream team that are all operators, because it all starts at design. Concurrently, Canada is forcing a critical mineral strategy. This is evidenced by the forced divestiture of Cinnamine from Power Metals Corp and relinquishment of their spodumene offtake agreement, citing a multi-step security review. Unbeknownst to most, Canada also has an established EV industry. In excess of 1.6 million EVs are exported annually, and it's clear that Canada is now trying to force a downstream solution. So where does this leave us? There's limited production that's come out of Canada, coupled with the government's downstream requirement and a lack of processing expertise amongst junior lithium explorers. Our solution is the Quebec Lithium Processing Hub. The Quebec Lithium Processing Hub is a mine to battery grade lithium carbonate strategy. We're going to leverage a 1 million tonne per annum concentrator, feeding a 16,000 tonne per annum lithium carbonate plant. The concentrator will be based on the proven Mount Cattlin design and overseen by the Dream Team. We'll source our ore from either our own resource at Apollo or by entering into 5-year run-of-mine offtake joint venture deals with juniors in the area. These joint ventures will bring forward cash flows for the juniors and enable them to invest in accelerating their own mine development. Then, after that 5-year term, should that junior wish to build their own concentrator on site, they'll be able to do so in conjunction with Iggy and his team. We will help juniors become concentrate producers in their own right. The 16,000 tonne per annum battery grade lithium carbonate plant will also be based on the proven Jiangsu design and overseen by Iggy and his Dream Team. Battery grade lithium carbonate will be sold into the Canadian, US and European markets, meeting the government's critical minerals strategy and requirements, but more importantly, providing a downstream solution for Canadian lithium miners. In terms of our project, this project, we've engaged Primero to complete the engineering study for the concentrator. Global experience, including Canadian and Australian, but they've been charged to determine what the cost will be to replicate the Mount Cattlin concentrator, but for the Canadian environmental conditions. This is the flow sheet for the concentrator, something that's very unusual to see published by any company, if you like, but it's a testament to Iggy and the team's confidence that they're on the right path. It mirrors Mount Cattlin, except for the inclusion of this flotation flow, which will serve to increase throughput. Hatched Engineering has been engaged to complete the engineering study for the lithium carbonate plant. Again, world-renowned, reputable company, but most importantly, Iggy's worked with them before. He built Jiangsu with them. And similarly to Primero, they've been charged to determine what the cost will be to build a Jiangsu-style lithium carbonate plant, but in the Canadian environment. The refinery flow sheet. Again, Iggy and the team, super confident, happy to publish this. Worth noting that the purification flow at the bottom, which turns the lithium carbonate into the battery-grade lithium carbonate, was the first of its kind when Iggy built Jiangsu. So we're really trying to fill a downstream gap that's quite significant in North America. There are very few lithium refineries in North America, so it's a gap that absolutely needs to be filled. We're starting to work downstream and work our way upstream. We've had exceptional government support, strong investment interest, and are in discussion with a ton of juniors around establishing that first resource. We also engaged Hatch to complete our lithium carbonate refinery location study. Hatch had an eye on all things important, including water, rail, all the other infrastructure, including availability of employment resources. And after development of a short list of circa 5 locations, we've settled on the Bécancour Industrial Park. It's serviced by a sealed road, has access to rail, and is in close proximity to a deep water port. We always get asked, why are we focusing on lithium carbonate and not lithium hydroxide? Well, it's an easy answer for us. Our team has exceptional experience in lithium carbonate. Lithium carbonate is also the feedstock for LFP batteries. That Battery growth has skyrocketed. I think last year Tesla announced that they'd moved all of their batteries to be LFP batteries, citing improved safety and reduced cost profiles. So in summary, we've got the Apollo Lithium project, which is nestled between what are now two major discoveries, so huge upside potential there. We've got the Lithium Dream Team, so board and management with a proven track record in being able to deliver difficult projects in difficult circumstances, and also the Quebec Lithium Processing Hub concept, which is a vertically integrated mine to battery grade lithium strategy. So there's no better time than now to join us on our mission to build a lithium future.
Well done, Gurno. All right, team, you have earned yourself a well-deserved break out there for your diligence and being able to sit here in the chair with me for as long as you did. It is packed out there, it's a little bit warm. My suggestion would be to grab your nice cold food and bring it back, or get your food and bring it back here in the cool and have a chinwag with everyone about what we've just heard, and enjoy your break at home as well.